With competition comes pressure, and with pressure comes innovation. Nobody wants to invest in a boring business. They are looking at memes right now, and they're looking at memes because to them it represents a culture, and culture is a huge thing. Airdrop game. People don't really, the real people don't get airdrops anymore. At the end of the day, it's the people that matter.
Hello, welcome to Bitget Show. I'm your host, Vugar Usi, and today I have with me investor, media giant, and a pilot, Key. How are you?
I am very good. Thank you for having me here.
I like we have this love for flying in common and to the moon. As you say, like, why do you like flying?
As a paraglider, I have always seen that it gives me serenity. People usually think a lot of sports are for adrenaline rush, but I don't see that. When you're in that moment of pressure, you actually have to stop thinking too much. You need to calm down and get in the moment when you do what you do. And I like that. It to me is like a meditation. And I get the same thing whether I'm skydiving or paragliding or any other sports.
You are like one of these people who put on their CV, like, I can perform under pressure. So it means you perform well under pressure, right? If you are just, you can concentrate because like then it means you don't panic.
Yeah. Yeah.
And do you have a panic buy or panic sell?
I don't know. So for me, I give it a thought. I decide what I need to do, but I'm also not a daily trader or anything. So I make investment choices by the right analysis if it makes sense to me, but I don't do panic buy sells.
Like, how do you do your investment analysis? Because I worked at the VC space so
Mhm.
long, and one major pattern I saw that whenever you have this like a lead investor or some big name coming, everyone panics and rushes without like actual due diligence because they hope that the right person did it, and that's kind of a, as long as you get that one big name, your bucket gets filled. Like, how do you make the investment decisions? What's your logic or due diligence, or what do you believe in?
Okay, first and foremost, I believe that the business should have its fundamentals right. So if it does not have the basics to the point and place where it can sustain itself, not just for the launch, but for let's say in a couple of years or 5 years, those are the key elements. And I do make sure that they do have the revenue models, the ability to generate clients or sustain themselves is there. But beyond that, it all comes back to the team. At the end of the day, it's the people that matter. Business can change. They can pivot their ideas. They can change their product. They can even change how they work in a space. But people don't change. It is their nature of who they are, and whether they can persist through the challenges, whether they can break through all the barriers, they can sustain a bear market. All of that comes back to their nature. So I like to learn and understand the people. What is the history? Where do they come from? What is their vision of life? How do they comprehend and deal with the challenges that is before them? So once you understand the people and a business model, because business model, I cannot depend too much on it. It is great right now. It can all make sense. Only when the rubber hits the ground, the reality comes. And most of the time, I've seen businesses pivot at least 3 times before they are even getting close to being live. And after they go live, they change consistently every few years. So, how do you rely on the paper, the document that you have right now, as any testament to what they will be? So, I depend a lot on the people and a little bit more on the business and the models there. And of course, the people who have validated them matters. If they were able to reach them, get validated, there is some value to it. Probably not as much as what they currently see it as, like holy grail. Okay, they have them. I'm going to jump in blindly. That doesn't work. That's what led crypto space to the 2022-23 chaos. But to some extent, people, the validation does matter. It shows a network. It shows a capability to get through a particular point in time. But I would really like to spend more on the human itself.
Like, wasn't that problem with the like SPF because everyone believed in that person and money poured in and it wasn't the person.
Yeah, that's definitely there. But I believe that if you don't analyze and understand an individual, it's a challenge. With SBF, I think what really happened is the same thing. They brought in some 1 or 2 big players, and those 2 big players were the point of reference for everyone else to come in. Yes, some people are really good, and you might have a challenge not to see through them. But end of the day, to me, people are the key aspects. So it need not just be what they say. It's also about what you find about them, how you feel working with them, communicating with them. One of the things I believe in business is you need to like the person that you work with. And if you do like them as an individual, it becomes so much easier. Of course, with an investor, the relationship is different, but when it comes to the team, it is even more different. So it's not just that individual who's leading the business, but the people around them. What is their dynamics and relationship with them? All of those count as well. But again, this is how Web 2 diligence were always happening. But when Web 3, it's very different. Everyone has an avatar. They're either monkey or a cat or something else. And what really matters is the hype that they create. But I think we should definitely look more deep, and especially right now with the ETF approval and all of that, a lot of Web 2 traditional business owners, businesses, entrepreneurs, and money is moving into that space. And the validation in the space is going to change. So now a lot of the traditional aspects of how it's evaluated comes into the scene. So I would look into those aspects more.
Yeah, I think that was one of the issues with like a Web3 industry, especially like early stages, even in the last bull run, was that people would come forward. They had like a mediocre idea. They would be like, okay, give me the money, then I'll go figure out what to do. And once you have money, kind of everyone is around that, consultants, agencies, and everyone wants the money. And also like the logic of investments, at the moment you get the money, you want to spend it because investors would put pressure on you to reach XYZ goal. And we saw so many projects come, create the hype, take the money. And it's not like it was a rug pull. They didn't take the money and run away. They spend it, but so wrongly that neither product was developed and money evaporated.
I think I can just kind of recall. I've been in the space since 2013 for almost 10 years. In the year 2015, what used to happen is these guys who had like a lot of bitcoins and etc. They needed wallets. So they would find people who have the capacity and give them free bitcoins. Can you please create a wallet that makes this easier? They were throwing money at people who had the potential who can create something. 2017, you had a white paper, you could raise money. So from throwing money at people with potential, they said people with a promise. You have a document, you have something where you say you can do something, they put the money on. 2021, it went a step further. You need UI diagrams, Figma diagrams, and then that's great. Okay, they have some idea, some design. Let's put the money at that. And right now, not only do you need to have some product, an MVP, but probably what they call as attraction in the crypto space right now. It's a buzzword where they expect you to show some numbers. And people are going to crazy lengths to bring the numbers work. I don't necessarily agree with how they do go about it, but now they do look for MVP and traction. And I think it's maturing, but it's not maturing at the speed it should. Because the business, if you look at it from a first principles approach, it's very simple. You need a working product. You need a product market fit. You need to know that the idea is validatable. That problem is really having an addressable size of the market. And with all that being there, bring in some surveys of people, experiences like an MVP, try something out to see that if people even like the solution that you're offering, and then scale it from there. This is how all the SaaS and Web2 businesses have always scaled. I don't understand why it takes 4 cycles for us to get to the midpoint right now.
Yeah, I think, one of the important aspects is that, like, as you mentioned, like every cycle, there was like a different approach or different needs to prove that you can do something. And in today's Web3 space, we see that there's a lot of bounty hunting, rewards, and so on, because everything on chain, right? You can see how many wallets, how much transaction is happening. And we see that all these communities are built on that incentive where people like actually not enjoying the product. Like I saw so many boring play to earn games that people are there actually not enjoying the game why they should. They're for money incentive, or so many other projects that you'll see. Oh, if you do that 10 actions, I don't know, then there are so many social tools that can, fuel that. But the moment the money is not benefit, airdrops are not there, no one uses.
So I was actually emphasizing on this concept quite a lot. In the crypto space, we emphasize so much on community. Community is great. Community is what drives your crypto journey more as an investor, more as people who are buying the token economy kind. But your customers is a separate pool. It's not the same pool. But your customers are the ones using the product. In the gaming space, customers are the actual gamers. They're not here to take the money from the rewards, but they're actually there to play the game because that's what they enjoy doing. But it's 2 different pools. It's not a single pool yet. And I don't know when that will become a single pool. But at this point, it's a very clear 2 different markets, 2 different products. A token is a product, your game or your product itself is a product. And you need to focus on 2 customer journeys separately. And even when we look at it from a reward perspective, I just read a report somewhere that these airdrop game, people don't really, the real people don't get airdrops anymore. It is the forms, airdrop farmers who literally have like a sweatshop of hundreds and thousands of people or bots that are getting most of the airdrops. It's not going to the harnessed community worker because they get hidden in there. A person who can basically bring in hundreds and thousands of referrals because they have a form of it, they can generate more ROI and be on the top of the list on the leaderboard and make more money out of this. And it's not good for the project, it's not good for the business as well. But of course, that's what is moving the space at this point. It's the evil that we all know, but I don't think there's been an escape so far. We need that recognition from the space as a whole. Okay, you look at a project, you don't judge a project by the numbers on the social. It's not about whether they have 100,000 people in their Twitter. It's about the quality of the community, which again in Web 2 is easy. What is your revenue? What are you making? How many users on your application do you have that are using the product, not signed up because they got a freebie bonus, but because they're using it because they see a value in there as a customer. So if the right KPIs are established, it makes a lot more sense. But in the crypto space at this point in time, the KPIs are screwed up.
Like you're running a VC and you're investing a lot. And recent cycle, I saw that whenever the projects are pitching to VCs or institutional investors, most of the time the question was that, okay, we don't only want to invest in tokens, because in previous cycle everyone invested in tokens and they were hyperinflated with the bots and this motivated transaction. Everyone wants to have an equity. And we saw that because the idea of tokenization, that equity is kind of should be locked in the token and utility, but now investors are like, okay, I also want to have an equity, I want to have say. And this is bringing like these two models, and which is similar to what you explained. There are users and there are like these airdrop hunters. Like, how does logic will work? Like, as an
I think
investor,
this.
like what are you looking at?
Yeah, I think I am very skeptical on places where you have both equity and tokens, because you might end up with token or equity, which doesn't necessarily build value on the other side. So if you have a company that's driven by equity, the investors might push that, okay, stop charging your customers in tokens, use credit card because it's easy for them. Sure, use credit card, you make money in the bank, but the token holders become losers. Or you use focus more on the token, then the equity holders don't get an exit, because anybody who wants a value coming out of the business, they'll come on the token side, and equity holders become a loser. So where do you bring a balance? It's very, very hard to strike a balance between these two uh, opposite ecosystems. You can, but it's very, very hard. And I have not seen a successful model which can balance both. So right now, what is happening? Investors get equity and token warrant. And at a later point in time, they have a token as an option preserved at a low price, launch price. The token can fly at whatever price it is. And if the investor chooses, they exercise the token warrant and get the tokens at the point to sell if they want to profit from there, if they realize, okay, equity is just not enough. So equity with token warrant protects the investor, but also makes both equity and token exist. But me personally, I would prefer businesses that are purely token based with equity assigned to the foundation. So nobody owns equity and so on. But again, the problem, all of these things come into place is because there's been a lot of bad plays. Founders cannot, like if you have a pure token play, the DAO controls whatever is happening, but the DAO voting is not happening in a fair way in the blockchain space. We know it's very screwed up. It's as good as not having a DAO. And if that is the case, then the investors have no way to direct a project or no way to guide or be part of the decision making process, which forces them for the need of equity. And you can see the division. There are some VCs who will never invest in tokens and others who will never invest in equity.
But in my opinion, because in a traditional Web2, even not like a Web2, like a traditional, startup ecosystem, be it SaaS business or anything, like there was like a singular model, right? You build a business, investors put in the money, customers come generate the revenue, and then either IPO happens or some sort of exit, people exercise and unlocks the value. The promise of Web3 and blockchain was that we want to empower the people back, right? And idea was that there will be token pool, more we use it, more it will become valuable, more everyone benefits. But now, as you mentioned, there are like these airdrop hunters, there are actual users, and then there are investors. Like there are like a three kind of different groups fighting for the same locked value, which is in a traditional businesses, it's just like two sides, right? Investors and the users. And don't you think that while we try to democratize things, we actually made it more scarified, like everything is coming in one place and everyone is fighting for the same portion of the wealth that is locked in some project, and that doesn't help things to grow faster.
I think one of the best analogy here is in the past, like you rightly said, it's about your business. And the only thing that matters is here's your product, make it better, make your customers happy, generate revenue from there. Ta-da, it's over. But right now, you got to run your government because you have your own system of probably consensus or your DAO, etc. You run your government, your policies, you run your economy like a Fed, print your money, you decide what happens with the economy, you can control the inflation, deflation, and all of that, which probably the governments are still trying to figure out right now after hundreds of years of trying to run the reserves. And you give all of this along with the business product, create a product, and all of this responsibility to a guy who's a first time entrepreneur who's just starting his business, trying to see, oh, there's amazing crypto journey here, there's a great opportunity here. What can I do with it? All this responsibility with zero education behind in this, because we were never educated about running a government or any of these aspects in our schools and universities. It's new. Running business itself is new for most people. This is a huge responsibility on someone's shoulders, and that obviously leads to catastrophic failures and challenges because they can run one part and they screw the other part. That's exactly what's happening. Some companies in the crypto space run their token very well, the product is non-existent, or they run the product very well, the token is screwed up, and that kills the whole business. Someone makes an investor very happy, investor is very happy, they say thank you so much and they leave, and then he sits with something that he cannot do anything else with right now, and he cannot raise additional round of funding. So how do you bring about a balance here? And that is a social, economic, and political experiment that we're doing right now to figure out what are the right ways to run a business. But right now, if you notice the trends, the interest in the DAO and the DAO related communication have gone down substantially in the cycle. People are not talking about DAO and governance as a primary focus as they did in the previous cycle. It is there, the technology is there. People are growing on the technology, but it is not the focus of communication. Things are changing, things are evolving, and we have not found our ideal fit as an industry. And I believe it's going to take some time. But put a pause on all of this. Now the institutions are coming in, more centralized products are coming in, and traditional instruments are coming in, and they're going to steal part of the show. They're going to bring some of those like real world assets and all of that, playing its own role in the space. So now these guys are almost bifurcating the space into two parts, and those real world assets and things like that can take off more easily because they are number one regulated assets. All the legal and physical things are already sorted. There's not a lot of token economy around it because it's really pegged to the asset itself. And the only thing that they have to figure out is a simplified app, a simplified way for people to buy. So now they're going to steal part of the show, part of the liquidity, whereas we still figure out some of these aspects of figuring how to run all the three things in one go.
Like talking about institutions and like I know like entire ecosystem, last 2 years we were super excited about ETFs and finally getting recognition. But do you see a danger because these institutions were there for 100 years? They're much better in hiring, firing, organizational structure, optimizing the value, all these things that, as you mentioned, like our industry is still figuring out. And then what is there a danger that these people will come with so much money and so much power that can reshape and everything and actually, iron out all the things that we were preaching for years about self-governance, DAOs, or everything else? Like, what is the positives, but also what are the major negatives of institutions?
What you said is very true, and it is happening. There's no doubt. They are going to come with the process systems, every resource out there, and they know they have done this. They have a playbook. And we are literally trying to find the cover of the book right now, right? We are so early into the scene. So they will do what they're doing and what they're good at, and it's fine because that's the nature of the crypto space. It's a matter of choice. So we can decide if what they have is better and we want to work with it. That's great. But there's always a place for the new way of doing things, probably not shaped well, polished well, but there are a lot of people who prefer the new era and the new way of what the crypto ecosystem is creating. Because there's one thing that's very clear. When this whole crypto space came about, people understood the challenges with the control system that the traditional institutions have. And a lot of people realize they don't want that. Yes, it offers comfort, it offers security for them, or perceived security, it offers them simplicity. And the crypto space is coming with simplicity, with account abstraction, and with all the simple apps that's coming in with one-click authorization, removal of MetaMask, making things simpler and easier is on its way, and it's coming through a lot of different new ERC standards that's coming up and so on. So with that change, it's a question of time when the products out here become better and sophisticated to compete with the traditional products, which has its drawbacks. But right now, in the short term, all the attention that they bring is a free marketing for us. We get a lot of eyeballs. Everyone has heard about Bitcoin because of the ETFs, and they bring a lot of more products on board, and they bring all the eyes towards the world of crypto. And all we have to do is just tilt their head a little bit towards what we are up to. And that's all it takes for us to bring more liquidity directly to our self regulated markets.
I want to take us back to the previous point you made regarding that we see the founders and project makers who are either good at, token side of the things or the product side of the thing. But like, do you think at today's crypto industry, even like a product is important? Because we saw so much meme tokens are, trading so well without any product or any utility. It's just a hype out there.
Yeah, I think there's a place for both. One of the things that even I heard, I don't want to name some very big VCs and very big entities in the crypto space, super respected, probably the biggest names you would hear. They are looking at memes right now. And they're looking at memes because to them it represents a culture. And culture is a huge thing. So there's a space. To me, it's like a product. It has its own customers and it can exist. But having a real product is also different and it is important. And that's where most of the GDP is. And if that is how businesses were run all these years and that's where the value exists, it's a matter of time before that part of the market grows in the crypto space. Because one of the things that I've always been passionate, like, we run our accelerator, Key Difference Labs, and our goal with our accelerator has also always been to look at Web2 business models, bring them to Web3. How do you bring a traditional business, incorporate that into the Web3 infrastructure so the value, you don't have to find a new value. I hate hearing that, okay, here's a token and we are trying to create an utility for the token. And here you go, staking is a utility. Here you go, and a gambling game is a utility. Our DAO is a utility. Those are not utilities. Those are different functions in business. You need to have a product beyond all of these elements. That product can have its DAO to govern, it can have staking to create loyalty and retention of users. But all of that is fine, but you cannot make that your product and call that you're trying to create a new utility. It, to the bottom of my self, it kind of burns and destroys me when I hear about all that that's going on in the space. I believe a product is needed, and that is the maturity of the space. And the space has to get mature sooner or later, or be replaced with the traditional institutional players who are coming on there who will make that happen. So it's a competition. And when you have a force, when you're threatened, you got to improve, you got to change. And the competition in the space is not getting lower, it's increasing. And with competition comes pressure. And with pressure comes innovation. And that innovation will shape the new future of crypto world.
My logic was always, to invest in products and projects that I really believe in. And long ago, I was like very young, and my dad is also an investor, and he always told me like you should only invest in things that you know a little bit at least about. You shouldn't just blindly go and invest in something. And I definitely believe that product is important, and I think our industry should really embrace that product first mindset, because we saw that last year PayPal, right? The payment giant introduced its own coins. And if more and more traditional businesses just embrace Web3, that it's a really great way forward, it will be very hard to compete with them because they already have a brilliant working product. It is just another feature for them. While we have another feature, we need to build entire product on top of it.
So this is one thing. When I look at a business model, when I analyze a business, this is one thing I look at, okay, what is the essence of this business? Is this something that a traditional business adds as a feature and this business is dead, out of the game? And if it is, I don't prefer to be part of that. But what I always recommend is that crypto and blockchain is a philosophy. It is not just technology. And if you imbibe, if you take that philosophy in and you create a business out of it, you're not going to have a Web2 business with the token component. You would have something that's ground up different. And the best example I cite for this is what happened with the hotel space. Initially, you go to a hotel and you book a room right in the door, in the reception, you order for it. And then the hotel started having their websites where you can go reserve it online. And that's like web 0 to web 1 or web 2 for them. And then you had this aggregation websites who aggregate all of those hotel data, and they allow you to compare prices and choose the best hotel. And then you had websites which aggregate the aggregating websites, right? So all these derivatives. And then you had something that breaks it, like Airbnb. Why use a hotel inventory when you can use your house as an inventory? What if you become the hotel and you allow people to book and work with you? And then what's it? What's the equivalent of that in the Web3? What if you have the same system without Airbnb there? What if you did not have that player in there? If you think through those lines, it is not the same as an Agoda or Booking.com or Airbnb having a token as a reward point. It is a new revolutionary model of business, Web3 native. This is what I call as a Web3 native business because they fundamentally have that concept of Web3 in them. Do they use community to validate a property? Do they use community to verify something there? Do they make them part of the business process? It is not a feature. It is the nature of the business that is different. I mean, just think about this with the education industry. The money goes to education institutions, not to the teachers. Teachers are poor. They cannot survive. They complain about it, and the students are having student debt, and they cannot resolve it until they are like 60 years old. And the only person who makes money is the institution in the middle. Eliminate them. Bring the teachers to the students using the power of blockchain. Access them from two different parts of the world. Both would make more money, or one would save money. Students would save so much more, and teachers would make 100 times more money. And that is possible. Do that in the industry of agriculture, from the farmer to the end consumer. Remove the bottlenecks and the middlemen, traders who make most money. Do this with every industry. Disrupt it. There's a huge scope of opportunity for all of those things. You don't need to compete with the Web2 player. Web2 players look at crypto, they'll see the trading, they see the speculation, they see how they can make money by issuing NFTs. You have seen that with traditional players. They come and they issue an NFT which is of no use. They have a business, they can attach it to their business, they can build loyalty with their business, they can do so much with their business. They don't do that. I don't know if it's their fault or the consultants that they work with, but they do the same memes or they do the same NFTs which has no utility, just issue it, mint it, issue it for the sake of speculation. But someone who's truly Web3, a Web3 native person, would understand how to connect the dots between the value of Web2 business and Web3 benefits, which solves their inherent challenges. And when those challenges solved, it creates a great business value. And you cannot beat the business. And these guys in the traditional space, unless they change what it means for them to be themselves as a business, unless they completely redo themselves, they cannot compete with these guys. And that's where the value is.
Like, what do you think? What's the biggest challenge? Because in my opinion, the biggest challenge is that even though we like Web3 industry and like blockchain tech as a technology is like a very forward kind of a leap forward technology, I think we are still lacking a lot of high quality talent, people who firstly believe in the technology itself and have the capability to do that, great advancement, because you can't expect like a 17, 18 years old social native Gen Z who managed to build a community and issued his own NFTs or her own NFTs and eventually went to collect some more money and issue some more tokens and figure it out on the way. And you fly, helicopters, and you know that it will be very hard to change engine if you are on the sky already, right? How to fix that? Like,
I think it's a misalignment of incentives in the space. Let's say you have an amazing product and a great business, and you are issuing a token right now. It is a boring business. Nobody wants to invest in a boring business. It's not the next narrative, it's not the sexiest trend, and nobody wants to invest in something like that. If that is the case, it is going to have a very hard time to go to the market. And that's what's happening in the space. Boring businesses which can sustain, which can make a lot of money, are not going to make 100x out there. They might make a 3x or 4x or 5x, but they will live for 10 years. Would investors invest in that? Probably not, because VCs look at moonshots. VCs want that next 100x or 1000x so they can average all the 99 other companies that fails that they invest in. So that's a problem number one. And then you go on to the second part. People who are in the space, let's say influencers. what excites them? They like to look and ride the waves of the narrative. If they go out and speak about something that nobody is interested in, their audience are not hooked on it, they're going to lose their audience. So now they have to do what works for them to row their boat. It's the same as the news medias. News medias have to entertain their advertisers. It doesn't matter what is right. That's the whole reason why you have all the big medias doing the wrong things, that is creating the whole sense of distrust on the media space. And now you have investors, community members. They go towards the next big airdrops. They go towards the next big hype. And the next big hype creators have to dilute their tokens, dilute the economy, and issue these worthless airdrops to attract people out there, because it's the only way they can attract. And those people are not even their customers. There's no connect. It's not like a wheel that's circular and round. It is like, like something is poking on all sides. It cannot move. It cannot travel. It is just stuck. You put it there, it sinks to the bottom of the ocean. You're designing an inanimate object that sinks by the very nature of misalignment in interest, stakeholder interest, and a direction. And that can only change when one person changes it. When one company or one person creates a new product against all the odds, find a way to raise the money because of who they are as an individual, bring interest from all parties because they have the network and access to it, and they're able to take something to the market and prove that something right can also garner the interest from investors and all parties. And when that happens, as an example, I think people will start following it.
And I like the analogy you mentioned, because I recently noticed that there's so many handcuffs for these investors and also for the founders who issue tokens, and then there are these market makers come in and all the other players that actually make more money probably than everyone else, because once you issue token, you don't want it to go down to the zero, and you need to burn some, buy some, sell some. And it's nothing new, right? Traditional businesses, Walmart, and all the stock listed companies, they were doing it for years, and it's even legal. They buy back their own shares because they don't want the share prices go down. And while we were trying kind of a reinvent everything, by default, we kind of fall into the same cycle and kind of start doing the things again and again and again. In this part, while we are trying to kind of figure out what is kind of good way or best project to invest, for the perspective of an retail investor, a regular person who day trades or just invest in some project for fun or have an extra money, they want to multiply it, what is your advice? What is a 3 key advice you can give people how to choose that right project that even if they don't make next 100x, but they will not lose or they will not be a victim of another rug pull?
I would focus on the people, because here are a few honest truths about the space. It doesn't matter what happens with your token or the product, the market is manipulative. We all know that for a fact. Everything is manipulated out there. The person who is leading it, if they are good and they're the right person, there is more likely that they do things in the right way. You cannot trust anything else other than the team that runs it. And more importantly, the people who are part of it, who are investing, they should have more patience. Right things take time. When I look at some of the best businesses in this space, and take it from the chains out there, which are living right now across a couple of cycles and more, they were not created in 1 year or 6 months. They were created over 6 years or 10 years. Yes, some of the chains, they actually date back to 6 to 10 year time period when it started and when they started working, researching. It was not an 6 months or 1 year, 2 year, 3 year attempt at something. And good things take time, and investors or individuals in the space need to focus and be patient towards it. And they should give in that uh, space for the founders to try, to fail, to fix. And we live at a point in time where judgments are passed so fast. You don't do something once and that's it. You're cancelled. You're out of the equation. You're kicked out. You're not considered to be a human who can make mistakes, but everybody does. So it's a very challenging time that we are in. And I would just tell them to look at the right people, look at their backgrounds, look at the history. What did they do before? Are they even capable of pulling the show? And if they are, what is their history? Are they persistent? Do they have the readiness to get back up on their feet after being hit again and again and again? And those are what I would look for, and some common sense. Is this business product idea that they're talking about even makes some sense in any
Any
possible
sense?
any sense at all, right? Can it even generate revenue? Can it even work? Can it even sustain itself for beyond 3 days or 30 days? And if all of those are true, that's great. But I think a lot of common sense and some diligence on the people involved can go a long way. It can probably help with 90% of the cases. Because, I mean, I've been in the space for 10 years. And I believe from my personal experience, you would not end up in a rug. You would not get hacked. You would not get into any of those big troubles like losing money on the platforms and exchanges and all of that if you follow the right diligence. There are a few basic steps to follow in the crypto space. And if you just learn what those steps are and follow that diligently, not be lazy and control your greed, know that there is a lot of opportunities to make money all through your life, millions of them. There's always going to be the next big thing. So exercise caution, control what you do with your portfolio. Don't go all in with every other meme coin out there. And yes, there are a few people who made a lot of money doing some of those, but there are way more people, probably 99.999% of the people out there, who killed their life in the journey. So just the basics would solve a lot of problems for people.
I think like doing your own research is very important in our industry, because otherwise you end up on in the hype, and most probably you are not the first one to hear about it, especially if you get your news from the social media and everywhere else, you and if you put all your eggs in one basket, it's not the right strategy. Like, I want to go back to that, doing due diligence on founders and people, because back in times, if you like become a founder, you usually have this kind of a journey where you worked most probably in a one big Fortune 500 company. Then you went and probably you are proud that you are employee number 1 or 2 in some startup that became a unicorn. Then you became a co-founder somewhere else. You exited, and then you came with another big idea. By this time, you already been on so many boards. You already knew so many institutions that invested in your previous companies, and there was this kind of a journey. While because the crypto industry is super super new and people are super young, and either they came from web 2 or other industries, or they just started working in crypto, like, what kind of founder profile do you look at when you do your due diligence? Like, what are these like a top things you look at when you are trying to invest?
Hi. This question needs to be answered with a little bit of consideration of what time we're looking at. In the crypto space, in a bull market, things close very fast. In 7 days, things fill, and sometimes even lesser, which ideally means it doesn't give you a lot of space and time. And it's not like you can hang around with the founder a couple of days to understand them. It's going to be very, very, very hard. So you need to make quick judgment. But in a normal instance, in an ideal situation, I would like to understand the thought process. How are they thinking through something? How are they solving a problem? How do they tackle certain questions and challenges that are put before them? Because the way the mind works, that process itself gives a lot of answers to how they would think about it in other instances. So I would just dive deeper into some of those aspects and even their honesty. Because a lot of times in a startup space, the founders do not know answers to every question. So when you ask them and when they say they have not figured something out and they're trying to figure that out, that is a honest, good answer I would accept, rather than someone trying to answer something cooked up to just kind of make that conversation appear to have sense. Shallow answers or a bad sign. I would prefer honest no or I don't know rather than shallow answers. So it all goes back to the psychology of a person. And if you do understand and go from that angle, you can definitely get a lot of insights about the individual and their who they are. When you know who they are, you can actually project how they would react in different situations, how they would think through their situation with them, their relationship with their members in the team, how they handle conflicts, how they handle tough situations, how they handle under pressure. What would they do when everything goes against their will and interest, or against the direction that they should be going on? And what are they going to do when things are abandoned or in a bear market? So you just need to consider all of these aspects. And if you can do all of that in a 1 hour call, that is amazing, which is where you need to have the right people. I mean, in our team, we have psychologists. We have like many psychologists in our team, and their job is to work with that, work with our teams on that, work with people that we hire or people that we bring and invest in, and people in our accelerator. All of that, it helps us to deduce things to a point where you can predict function from. Of course there are a lot of unpredictable factors here, but this is what you can do to the practical extent. It is way better than not even talking to the person, not even looking at the deck. Who is the investor? Who is the exchange? Here you go, here's my money. It's just better than that.
And we talked about founders and importance of like trusting in people. And you mentioned a very important factor that in a bull market, in the hype, you just like get a 5-7 days to make that quick decision. And I think 2 years back it was crypto, and today that hype is around AI and next hot thing, and that's quick decisions, huge money. And we saw that investors that had interest here, now they have another interest there because it's a new cool kid. Like the question is like, where is the money? Where like actual investors are looking at today, not just within the crypto space, but general.
I think AI market is definitely taking a lot of interest because it's very simple. It is traditional. They have a product, they have subscription, they make money. So they don't have to speculate as much. But at the same time, there are challenges with it. There are more AI products coming up in a day than it did in like years before, which ideally means someone launches and within 3 days they're replaced. So the fast speed at which something gets replaced is like on steroids, 10 times more than the blockchain space. In the blockchain space, you probably get replaced in 6 months or 3 months. In AI space, probably 6 days or 3 days. So with that being said, it is a gamble there as well. And the money will go there. It's a beautiful products are coming out and a lot of useful products. And yeah, that's going to happen. But the world doesn't have a deficit of money. In crypto space is going to attract a lot more, especially with all this ETF approval, a lot of attention coming here. But the question really is, what part of the crypto space attracts it? Is it the venture space, or is it the real world assets, which is a multi-trillion dollar market that will attract a lot of money? But that money, I wouldn't categorize them as a crypto money. It's coming for that asset. It's coming for the traditional asset that's behind the veil of crypto. Uh, I'm very sure the crypto bros, we will all make it part of our our value of valuation of our space, but in reality it's not coming because of our space. So I would definitely see that the infrastructure and the tech in the crypto industry will continue attracting the funding, because even with the AI is great, AI is amazing, but AI depends on data, and that data is something that can only be monetized with blockchain in a transparent, honest manner without the privacy challenges. With ZK and what we are doing here, it's beautiful. Like you even have Ocean Protocol, who built a whole data marketplace, and there are many data marketplaces coming up right now. And these data marketplaces with ZK would be the perfect fit for making AI work. Otherwise, they can steal data all day long, but companies will start blocking the data. Like Twitter blocked AI from scraping it and all of that. So when that starts happening, they will look into the blockchain as an underlying infrastructure. So to me, in my vision of the world, anything in the world can become hot. They all have to come back to one thing. That's humans. And humans require decentralization, transparency, authenticity, and not changing things randomly. And those are things that blockchain brings. It's the mother of all solutions of the future. It is the foundation in which the trust and trustlessness or permissionlessness is going to operate. It's an infection that will never go away. The moment one person has seen what blockchain can bring to them, they will never go back to the existing systems in place. They will never go back to the traditional systems in place. It is a permanent change in the DNA of an individual. And the world has seen it, the world has realized it, and there's no going back. They can go anywhere, they can go play around anywhere, but they'll come back to the foundations of what this represents. And every technology will tie back to this as a base. They will use this in some way or other. And this will be all around us. We have the biggest trends up and coming in the future: universal basic income. AI, only with the power of blockchain, can make UBI work. These real world assets cannot function without blockchain as well. And anything we think about around us in our life, all of them tie back to what is the future. Maybe in the current next 1 or 2 years, there's less interest. Sure, there are shiny objects, but shiny objects wither one day, and you need to go back to what is real. And I believe blockchain is more real than everything that exists in the traditional world, because blockchain can make all of that better and equalable. a point in time where anybody in the world are on equal level playing field. They're not under the control of someone else. They're not under control of an organization, but they're all having an equal share to take part in the future. They have their future in their own hands, not in the hands of the government. And that's a beautiful vision. And that vision is worth investing in.
I like this is like a both blessing and a curse of the industry, because I think the way AI had this narrative that it will make it much efficient for businesses, it will replace not only blue collar but like white collar creative people and all these expensive people, and make more money and more benefits. And also, I think that because AI is still expensive, but it burns kind of a institutional money, and the end it doesn't much have any payment for the end user, right? You can go today to most of the AI tools either for very little price or at least with no cost. You can use it, and even if they go out of business in the 3 4 days, you don't suffer much. While in blockchain, we force people to have the wallet, do transaction, pay the gas fees, buy your tokens to pay that gas fees, and if something goes wrong, the person loses the money.
It's two different markets, two different solutions. And I don't think they compete with each other in any measure because AI is creating solutions that help people with their various tasks, businesses, production of something, and life, and so on. But blockchain deals with an infrastructure layer that's below that or that supports that. So it's two different markets. Yes, blockchain is hard, blockchain is complex. And the job of every one of us is to simplify that. And right now, we are in the process of simplifying. And there are a lot of solutions, a lot of new business owners coming up trying to deduce it to the point where anybody out there can use. So, one of the things I really recommend is to anti innovate. All the great innovation that we are doing is great. It's amazing. That's what brought us where we are. Right now, let's start going back to old ways of doing things. Simpler UIs that the people are used to, simpler the product interface and the user experience should mimic what the Web 2 experience is. Let's not have let's not innovate on some of those things so that it's similar for people to come in. The onboarding should be easier. And to make that easier, it's not that straightforward because we have innovated so much. It is so alienistic. The concepts, the words that we use, the methodologies, the process is so different. Now we just need to make them all align in their ideology in a way that they understand and they use it. The more we simplify, the more we find a middle point, not the Web3 extreme, not the Web2 old school way, but the middle. Web 2.5 is a starting point. It's the first step. Unless you go to from Web 2 to Web 2.5, it's very hard to come to Web 3. So baby steps towards it. We cannot really put a very big wall and create a nice, community of Web 3 with a huge 12 feet wall outside and then expect people to somehow climb
Break
that
that
wall,
wall.
right?
No, I liked I remember like back in ICO boom 2018, all the narrative was like, oh, people will come to Web3, and then we came 2021. It was like, oh, we are going to Web2 now. So okay, they didn't come. Now maybe we go. If the mountain doesn't come to Muhammad, Muhammad goes to the mountain. And I truly believe that the great role that all centralized exchanges played, because they took out that barrier of creating wallets, remembering passwords, and it was like social logins. It has on issues, but like it introduced a lot of people in a first place where you could still pay with your credit card, and you don't need to go through all these P2Ps and understand everything behind, and have this easy step. And I believe that, for example, with the ETFs and traditional institutions coming in, it will make it also better, because back in times to buy shares, you didn't need to go, register anywhere. You could just call your bank and do it. And today, if you can call your bank and still buy Bitcoin, I think it's a very, like, I don't know, it eliminates like 10 steps towards the process. And
Just it's not your Bitcoin because someone else has it.
we can come that point, right? I think it is always about it's your Bitcoin and you don't remember the password, because my parents, they're pretty old because I am 30 something, right? And every time they buy new Apple device, they come to me and I ask for their Apple password that I usually set up and put in a paper and give it to them. And probably they lose the paper and they want me to reboot. And if I'm not in the same space with them, it's a whole process. I have to call them, explain them. Now press that. You're gonna see this. Please do that. If you remember this, what was your mom's, I don't know, maiden name, and all that process. And I think because even though we talk about like a young people, Gen Z and millennials, us, most part of the world's wealth is still locked into boomers. They have more money, they have more assets. How many millennials have homes, but like how many boomers have until God forbid they die. And that passes generationally. We still, in my opinion, we still need to educate and bring that people into the space. And the only way to do that is to, as you mentioned, like to oversimplify things, make
So
it.
that's one of the reasons. Like, if you we created something called Forward Protocol, and the whole idea behind Forward was to simplify things in a way where business owners can use blockchain. Because right now, I go talk to anybody in the blockchain, including you and me. What do? We can trade on blockchain. We can pay someone on blockchain. We use that as a currency, but we don't necessarily use it in our daily life and businesses. So we built this Forward as a factory or a tool where people can just go look at all the various business use case templates, click, customize, deploy on any chain, and they can go live. And the whole idea behind that was a business owner with an idea without that huge 12 feet wall of barrier of time, money, developers, coding, understanding. They just think, okay, I want a solution. Let's say I want an escrow between two parties. There's something called escrow. Click, put in the numbers, and then click. It's deployed. 2 minutes. You're able to use it right now. That's perfect. They can understand that. And if you eliminate that wallet, even this deployment on blockchain doesn't happen with the wallet, but it happens because of non-custodial solutions that already exist in the space, where you can sign up using Google or Facebook. You go on, deploy everything, and you have a dApp that you own, and you never touched MetaMask. How powerful is that idea? And people who are interacting with the app do not have to understand gas fees. They do not need to have a crypto wallet, but still that is transparently on blockchain, and that's still decentralized, and it still works. It's just authenticated differently, it's processed differently, and that technology exists at this point in time. We don't have to innovate anymore. It works, and it works in Forward, it works anywhere else. So I believe it's a matter of not educating them, because educating them we tried for the last 6 years. I don't want to try educating them anymore. I want to educate us. How do we as Web3 simplify things for them? How do we as Web3 go to them with tools that they understand? Because, like you rightly said, the business, the value, the money, the resources, ideas, and everything remains with the boomers and remains with that generation of people. And then educating them at the stage of busy life that they are in, it's easy for them, for us to introduce something, because we are the innovators. Why don't we innovate simplification? Why don't we innovate reduction of information? Why don't we innovate a white paper to 3 lines of explaining something, or 30 seconds video? All the SaaS products have less than 30 seconds of video. They have tooltips that says, click here, do this, click here, do that. Oh, you're done. That's it. It's very simple. Users pay us a subscription every month. We need to get us there. And that's the path and the journey we are in right now.
Yeah, I think like one of the greatest examples is the Amazon's one-click checkout, and I believe it cost them a lot of money to have it, but it's a brilliant tool, right? You don't need to do a million things, and I remember like back in times, all the e-commerces were like, okay, you have to create your profile first, but now you can check out as a guest because they want to speed up that process. And also, I know that a lot of e-commerce providers, the biggest teams are there for checkouts. They even do the checkouts the moment you put your two-factor authentication. You don't have to click OK or anything. It just takes the money, because faster it takes the money, transaction happens. For every second you lose people. And I think we need to reach in that state. And my favorite example how we are embracing that, most centralized exchanges, they work with Visa card and MasterCard. They introduced your own card payments, right? You don't have to, especially if you are sending money to overseas to your parents, now you can just give them the card. You put that USDT in there, they go, they purchase, conversion happens in the background, and everything is kind of a done for you or on in behalf of you. Because why there's no another solution that a merchant can accept that crypto payment without actually all that transaction, and you can do that conversion in the background and pay them, and they don't have to think about it. Like, because for us it's always like, oh, X place will accept, crypto payments, but then we expect them to have the wallet and all these things. Maybe they don't even need to, right? We just need to facilitate that process, as a developers in a background and solve that real life problem more than anything else, because it is always easier to kind of take that burden out of people and make it faster and make the use of existing ecosystems out there rather than trying to invent everything and building or being very exclusive. Because in my opinion, yes, it's very important to hold your own assets and your investments and all these things, be self-custodian. But in most of the time, money is there to transact. For years, people trusted their money to the bank and all these digital processes, and no one carries cash around. And not always you want to, hold everything, because sometimes it's about the speed of the money. And the reason why there's no all the dollars are printed, because we don't transact that much and it circulates. And the same we see with the USDT, it circulates so fast and so much that you don't need to hold that much USDT, because most of the time it transacts. Like, how we can shift from like my custody, my things narrative to actually, okay, let me use the money.
So right now, this particular season of the next 2 to 3 years, you would start seeing that happen. The Web3 as an industry will dissolve and become part of everything else. It will be integrated because it's a technology, it's a database, it's a philosophy, it is a different way of doing things, it's an ideology. That ideology cannot be a separate, alienated desert. It needs to be brought inside everything that we are using and doing. So now every business, every process, like what you rightly said, now if you have a card with USDT backing it, to them it's a card. There's money and I use the card. Where's Web3 in there? There's no Web3 in there. But behind the scene, there is the infrastructure of blockchain running it. It's not just the USDT sitting on the account. The whole system of how, and let's say the stable coin market works, how the stable coin is balanced, the oracles and all of that behind it. It's tapping a card is not that simple. We people in the Web3 can actually see so many things, from custodian, oracles verifying that auditors, a huge array of things that's behind a simple tap. And that is the future. And the dissolving Web3 as integral part of every other business out there is happening right this moment. And those who can take that edge, those who can move forward with it faster and do that effectively and reach more people. Everybody talks about reaching the next billion people. I got so tired of the phrase right now. But if you can reach the next 1,000 people, and those 1,000 people understand and use your product, you would reach a billion people. There's no doubt.
And as an investor, we are talking like next 2-3 years, what will be your priority to invest in? What kind of projects that, because you talked about next 1,000 people, right?
I would go on to real world assets, boring companies, which are traditional companies using the Web3 infrastructure, SaaS or BaaS, blockchain as a service, products which are something that everybody needs, which everyone would subscribe and use to. So they create ones, and then there are thousands and thousands of customers reusing, then everybody creating their own solutions. These three are my best picks. They are not the sexiest. They might not raise the most money. They might not do the most things out there. They might not be 100 and 200x's, but they will be there after 5 years. They'll be there with revenues, and they'll have a higher success rate, lesser disappearance, rug pulls, and what is the name of that company? Kind of a memory recall issues for us later as well.
I have one last question. Why we are talking all of these, and I want to go back to the beginning of the conversation where we talked about tokens and equity. Where do you see like this tokenomics coming? Do you think tokens will fade away in terms of, or there will be more companies that, especially these BaaS companies and so on, operate on the traditional method, or you think tokens will become a next kind of a more of a tokens for the shareholders and people will still get a chance to invest in an early stage?
I think tokens, for it to find its viable place, it still has to be very integral into the business. It cannot be reward points. It cannot be governance. I mean, it can be all of those. It's just not effective being just those. So it has to be, the newer models have to evolve to be able to use that more integrally as part of that ecosystem. But right now, I think a lot of real world companies and BaaS, they will not necessarily even have tokens in the first place. Like in real world assets, they'll have a token that represents the asset, but not their native token that you trade and speculate on. And with BaaS, other than incentivization, which doesn't make sense, they might not have tokens. They might just give a cash back to the users or reward money to the users like traditional SaaS companies. It makes less and less sense for them to have tokens in the first place. But I believe we'll find newer ways of using the tokens. Tokens are not going out anywhere. Tokens are the future. And I just think we have a little more time, or we need a little more time to figure more creative and useful ways. I've seen some projects which use tokens more natively in the business. It needs that for the customers. It needs that for, let's say, users being part of something. If they need to validate something, they need to stake tokens. Validate meaning not the nodes, but probably they approve something, verify something. So for you to approve and verify something, you need to put a stake. For you to put a security deposit in there, which is your tokens. And then you do something right, that increases. You do something wrong, that reduces. Things like that are economical with tokens in there, which can be speculative in nature, but it's still used as an integral part of the business and has a business value. Do you need to use their native token, or can you use Ethereum for that? Sure, you can use some of the standard tokens for that as well. That's a separate question, separate discussion, and a business logic for someone to figure out. But I believe tokens will have to find a better and apt place in the market still.
Perfect. Thank you for the show today. We were having Key at Bitget show, and we were discussing how to make the right investment decision from the institutional perspective. And I think in the next 2, 3 years, this bull cycle will be very exciting to see more and more people joining Web3 journeys and also empowering Web3 journeys through new products. And I was your host, Vugarosi.